What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, I'm feeling good. I'm feeling rejuvenated, rehabilitated, reassimilated. I'm ready to rock, man. I got some ocean feet last night. Today, we're going to be talking about Micron, ticker MU. As always, guys, got a little bit of a delay from when I talk to when you see me, or hear me, rather. Got the chat window up, saying hi to people, and I know a lot of you guys were over in the chat room earlier today, had a good discussion, looking at some of these financials with the stress test results, and not just the stress test, but you know, whether or not it's going to be okay for 34 of these institutions to go ahead and if their capital plans are going to be approved, right? So what their share buybacks can be, what their dividends can be, all of that sort of thing. It's supposed to be good, so it should be good for the financials overall. But we're not talking about financials right now. We're talking about Micron, one of my faves for sure. Why do I like Micron so much? I have it in Home Run Investor. I also have it in Momentum Trader, and I talk about it a lot. Now, this is one of those stocks where the price consensus and EPS surprise chart actually turned me onto it. So it's not like I have any secret formula or magic sauce for figuring out exactly when this bad boy was going to turn around. Really, it was just a function of being lucky enough to check it out on the exact price and consensus chart at the right time. So as always, the black line corresponds with the right y-axis here, which is the price. The red arrows are earnings misses. The green arrows are earnings beats. The multicolored lines represent the evolution of our Zach's consensus estimates over time. And I swear, guys, I couldn't do this better if I planned it. This price consensus and EPS surprise chart is absolutely poetry in motion. It's spectacular. It's beautiful. It does exactly what we want it to do. Mr. Newman, I'll hit you up on how you might be able to get into some of that. I want to get a special deal just for the Zach's Live folks. That's part of my plan here. So I'm going to get back to you on that one, Mr. Newman. So really, if you take a look at Micron here, as these EPS estimates started to tick up here, 2013, 2014, the stock did fantastic, rallying to the upside. Now, every stock isn't going to look like this. It's not going to follow this beautifully, but one thing about Micron that makes it so nice is that the underlying product that they're selling here, this DRAM memory, the memory chips that go in all sorts of things, it's not like the prices of DRAM trades like a commodity, pretty much. You can only bring on so much. You can only bring on so much new DRAM on any given day. I'm not going to just like put a DRAM drill in my backyard and be able to get DRAM out of the ground. It's a whole process with, you know, building the manufacturing facilities and doing all this. So it takes a while to get these things going. And DRAM prices go up and down just like commodities. So there's a huge supply demand kind of forces that take control there. Okay, so here we have these moves, and then sure enough, DRAM prices, if you guys want to look, you can check it out. DRAM prices started to top off there in late 2014, early 2015. So then these things started to come back down, and sure enough, when DRAM prices started to creep back up, Micron started to creep back up, okay? One thing here that's jumping out at me, there's two, well, I guess two. How long this sort of EPS descent was, and how this 2017 has troughed and then gotten nearly back to the heights that we saw previously. Now remember, these EPS numbers, this company is actually making money. And this is a tech company, and we're talking EPS close to $4 here when the stock is in the 30s for a tech company. Just kind of let that marinate. But anywho, this has been just a wonderful rise because of DRAM pricing, how efficient this place is. And again, guys, I know pretty much everybody here already is, but if you're watching this later, if you're not already hooked up with us on Zach's Live Trader, shoot me those emails, livetrader@zax.com. It'll be going along the bottom of the screen so you can see it. Also, check out our chat room, echat.co/room/213012. Shoot me the email, get your free 14-day trial, and hang out with us in the chat room because that thing it's got a mind of its own. Now it's starting to blow up. We're starting to find really good trade ideas, and it's a great place where we can be. So that's the price of consensus. Looks great for Micron. Let's go ahead and take a look now at the detailed estimates page on Zax.com, and we can learn a little bit more. So they're going to be reporting after the bell mañana, which we all know. Zax rank number 2 buy right now. You got the rest of the trading day today, and you got all of tomorrow to figure out, whether or not you want to mess around with this thing. Take a look at the revenue growth here on Micron. This is spectacular. Current quarter, they're looking for 86.4% revenue growth. Next quarter looks like 71.75. That brings the current year number in at 57.89. Next year's number at 11%. So there's definitely some slowing that's going to come in next year. And I think kind of that's why you're getting the valuation that you have right now. But if you look at the EPS side, it's just spectacular, the numbers, just because they had a rough patch there last year, and you saw that in the price consensus and EPS surprise chart. A lot of pressure on Micron, stock going to the bottom. So huge EPS numbers. I mean, that's just obnoxious. But if you look at next year's number, right now they're slated almost 35% year-over-year revenue, EPS growth rather, which is great. So you got some huge growth numbers here. Nice growth numbers here. Everything looks good. Now, here's the reason why it's a Zax rank number 2 right now is just over the course of the last 7 days, you have an analyst that has come out and raised their EPS estimate for the current quarter, next quarter, current year, and next year. Let me tell you, folks, it takes some chutzpah to come out the week before earnings and increase your EPS estimates on the stock. So you got to have some conviction if you're coming in and doing that. The overall effect to our Zax consensus estimate was really muted. Still looking for a $1.37 this quarter, $1.37 next quarter, but the current year number looks like $3.69, and next year's number is almost $5 is what they're looking for out of Micron. So nice. If you look at the previous quarter, a little bit of a disappointment last quarter, and we're going to dig into that a little bit, see what the overall impact was. So you guys know I'm going to fire up my G14 classified ZRS here, and let's look at these revenues in a little bit more detail here on the page, and you can see the revenues here, the big growth this year and next year. And again, last year definitely a rough year, negative 23%. But again, guys, that's because this stock, the underlying product here is those DRAM prices, which move like commodities. They have a mind of their own. Good news is we're in a trend, a very positive trend here for DRAM pricing. So this is nice. But this isn't what I want to show you. What I want to show you is we like to call the consolidated surprise. This gives us what the net effect has been on the price based on the previous earnings report. So I think this is 2 days before to 2 days after, so it's really gauging the immediate reaction, and then we can go back and look at the price consensus and EPS surprise chart to see if we're doing stuff. Okay, so again, guys, if you're not already hooked up with us, livetrader@zax.com. Shoot me those emails. I can get you that free 14-day trial. It's only $10 a month after that. I mean, really, it's just I don't even know why I charge $10 a month, to be honest with you. I think I do it just so you guys have some skin in the game and you stick around, really, because it's not really moving nor shaping Zax. But I got to, otherwise maybe they won't let me do it. But email livetrader@zax.com. We'll get you hooked up on that. Twitter @Bartosiak. And, of course, join us in the chat room. Okay, so what do we got here? Last couple of quarters have been very nice. So the last quarter we got a 9% jump in the stock. Quarter before that was a 12% jump. But we had a series of kind of ho-hum events leading up to that. So it really has just caught fire over the course of the last couple of quarters. And then if we go back here a little further back, you can see August 2015, decent upside, huge drop for the May 2015 quarter. And whenever you see this, I try to look back and see if there's any sort of cyclicality that we're talking about here, right? So I'll look at, you know, we're in the May quarter, so let's look at this other May quarter. We're not really getting, there's not really much of a pattern there, but that's something you just want to look at. Really, the overarching determinant here is going to be in that price consensus and EPS surprise chart that we have. That's really what's going to steer this in the right direction. Charles, this chart is part of our Zacks research system. It's like an institutional grade research platform that's available from Zacks. I think we might have a sort of lighter consumer version. I'm going to look into getting an offer together for you guys on that too. Okay, so where was I? Price consensus, EPS surprise. Just something we do want to point out because we did have these reactions, right? But let's see, just over the overall follow through of the move, and you'll see that this relatively consistent, some chopping here, nice little downside move, but it seems to trend in a singular direction, and we get a nice little bit of post-earnings drift. So that post-earnings drift is the movement in the stock which occurs after the earnings report. So it keeps on, you know, ticking up there, okay? So after the earnings report, is there follow-through on the price that you've seen on earnings? That's post-earnings drift. And we're seeing a lot of that here with Micron. Now, Micron's a great stock to use this EPS analysis because it tends to, you know, EPS trends take a while to develop and a while to reverse. So right now this is in a pretty bullish EPS trend. Should that continue, that should bode well for the stock price. Let's go ahead and take a look now at the options chain here on Micron. So this is going to be one of the fun ones, guys, because many reasons. First of all, they're going to report after the bell tomorrow. Then we're going to do the live morning after reaction to Micron on Friday morning, and that is going to be awesome because I believe we're going to be able to find some great short-term opportunities on Micron following up on that Friday morning. So that's going to be great. I'm actually pretty excited for it. All right, so as always, let's go ahead. The front week here is the 30th of June. Do the side-by-side view so that you can calculate the at-the-money call and put. Let's just call it 32 because that's pretty much where we're at right now. Got the 32 put, the 32 call. Let's go ahead and fire up our handy-dandy calculator and we can see what the sort of implied volatility is here. How much of a move is the market pricing in? And the basic way to do this is we just take the middle of the two of these. All right, so at the money call is $1.47 by $1.50. So let's go ahead and let's call that $1.49. Add that to the price of the at the money put, which is $1.46 by $1.49. We'll call that $1.48. So about $2.97 is what they're looking for on earnings on the $32 call. So a 9.28% move, which is actually a pretty healthy move for the stock right now. So almost $3. Basically, let's just call it a $3 move is what the market is looking at. And then so if you go back and look here with that at $32, you just do the simple math on that, do 3 to either side. So 29 to the downside is essentially what the market is pricing in, and 35 to the upside. So 29 and 35 is what we're pricing in here, okay? All right, so back to this price consensus and EPS surprise chart, guys. I do want to catch some post-earnings drift on this one, so I am going to look at maybe going out a little further. So I'm going to show you a little further thing on a credit spread or on this, and then I will also go sort of that front week or just the week after to give you some short-term ideas. So we're going to do a long-term idea and a short-term idea. So the longer term is going to go out all the way to August. I know, August, you're a dinosaur by August, right? But I really do have to do that on this one because we've just got to hopefully catch a little bit of this post-earnings drift here. Change it from, on bar chart, I changed from the side-by-side view to the stacked view here. And whenever you do this and you are on bar chart, I know a lot of you guys are doing your real-time thing right now as well. You should. I do this on the bar chart because doing this presentation with real-time numbers just makes everybody go cross-eyed and start freaking out because it changes so often. But anyway, when I do this, I want to make sure that bar chart didn't accidentally refresh these numbers, and they have a tendency to accidentally go to the beginning of the chart or anyway. Anywho, let's look at a vertical spread here. So what I mean by that is I want to buy an at-the-money call spread. So at-the-money call here, let's call it the $32 call. So one way to be bullish on this stock is to just go flat out buy the $32 call. It's going to cost you $2.49. You're going to think that your break even here in this case is going to be $34.49, and then anything above $34.49 you're going to go ahead and benefit from. I like to put together these vertical call spreads where I go long at the money call and then sell a little further out because A, I don't believe that the stock is going to continue to keep on marching higher, so why am I paying for access to that? And B, you can get in a little bit of time value, which is going to lower your overall net outlay and lower the amount of risk that you're going to have on any single trade idea. So again, the market was pricing in just like a $3 move here for shares of Micron as a direct result of earnings. The other thing I do like to do a lot, as you guys will know, is I like to look for these giant numbers that are out here in the options chain. And for whatever reason, there is a huge amount of open interest at the $37 mark right here, which is still, I mean, that's quite a ways out there, okay? So those of you looking to be much more aggressive can entertain this 37 idea. I don't think I want to do that right now. I think what I want to do is stick with what this market is sort of pricing in, and that's that $3 move. And I'm going to do the math on both of these just so you guys can see the difference between putting a 32-35 call spread together or a 32-37 call spread. So let's first look at the 32-35. So a $32 call is going to cost $2.49. If you simultaneously go short, look at bar chart doing it to me. Like, see, you got to keep an eye on bar chart, man. They got a tendency to do this. Okay, there we go. So let's go back here, guys. Sorry for that. So the 32, again, is $2.49. And now the 35 is essentially going to be $1.33 that I can get back. So you go ahead and subtract $1.33. So this would be going long or buying to open a $32 call, simultaneously going short or selling to open a $35 call. This is on the August 18th expiration. So you'd get back $1.33. So your total net outlay on this call spread would be $1.16. The amount of money that you can make on this is $3 minus that $1.16 or $1.84. When you compare that to the original investment of $1.16, that's 158% you could make. And what you need to make that is shares of Micron would have to close at or above $35 at expiration. So I'm going to say that the bull debit is going long the August 18th 32-35 call spread for a 1.16 net debit. Okay, I know it's a little bit further out long term, but we're trying to catch actually a pretty decent chunk here. Now I do want to compare that to the more aggressive trade, which is going all the way out to where this huge amount of open interest is for the stock. And the numbers here are going to look more attractive in terms of your potential reward. So it's still going to cost you $2.49 to buy that $32 call, but now you're going to sell the $37 call, which means you're going to get back 84 of those cents. So $1.65 is going to be your net outlay in this case. But here's the good news. The difference in the strike prices is $5. So minus that $1.65 means you could potentially make $3.35 on your $1.65 or 203%. Now, here's the thing though, and this is what ultimately ends up in me not deciding to put on these trades. You're talking about getting 150%, right, in these first $3. And these next $2 are only really going to net you an additional 50%. and you're also going to increase your cost basis. So is it worth it? It's only a question that you can answer yourself. For me, kind of officially, I'm saying it's not worth it. 32.35 bull debit, I think, is a decent way to go. Now, for you bears out there, and what the bears would tell me, the bears would basically be out here saying, you know what, I think this trend is going to reverse. So Aaron's got a good question here. Kind of why and how does an open interest level make a particular option more attractive or less attractive? Is it about liquidity? It's not really. What I'm looking for is if there are 20,000 contracts at a single level, then there's somebody out there with a lot of money that is making a decision that thinks that that level is an important level. And that's really all I look at it. So somebody that knows something thinks that that is an important and significant level. And when the guys with all the money believe that these levels are significant, guess what? They become significant. So that's why I like to take a look at that. And it's not, you know, it doesn't make me or break me. It's not the ultimate driver of my decision making. It's just another factor in the process. So when I see that, I address it. Okay. Now let's look at the bearish side of the equation. So these 32s, and we said it could give up that $3, which would make it every bit of 29. And if you notice here, I don't see any big, huge kind of area of open interest, right? So again, I see it, I kind of look at it, but it doesn't force my hand in either direction. So now let's look at how a bearish trade might look. So in this case, you would go long the 32 put. So that would cost you $240. Simultaneously going short the 29 put, you're going to get back 117 of that. So your net debit here is $1.23. The difference in the strike prices is $3 minus that 123 means you could potentially make $1.77 on this 123 investment, or 143%. Now what would have to happen? The bears would have to see shares of Micron at or below $29 at expiration on August 18th. Remember, this one goes out to August. So I'm going to do a bear debit is long the August 18th 32.29 put spread for a 123 net debit. Okay. Now I want to look at a little bit shorter term idea for you guys, because not everybody likes to stick around for this long. Now, the reason why I'm looking out this long is because of what I saw on this price and consensus chart. And you can see this on any price and consensus chart. So when you guys are evaluating an option or evaluating trade ideas, if you want to buy a stock, because again, a lot of this analysis that we're doing is stock specific. We're just applying it to options just to give you other ways to trade. But ultimately, you should be doing this in stock analysis for long-term holdings that you're looking at. We see this post-earnings drift that takes place for this stock, and it extends for a while. So that's why I went all the way out to August. And if you think about it, that's just, what, 6 weeks away anyway? So it's not it's not all that far. Let's go ahead and go in a lot closer for the people who want to be more aggressive. And that's right, I'm only going to go like a week out here, okay? You could do the next day's expiration, and we are going to do that when we're talking about lotto tickets. I promise I'm going to do that. But you could just go a week, 2 weeks, 3 weeks. So, like I said, I'm going to do the very front week, which is like 1 day of expiration for the guys who really want to get to the point quick. But ahead of that, I'm going to come here real quick. Okay. All right. Let's go ahead and take a look at the 7/21, the July 21st options expiration here. And my suggestion is going to be using the same numbers and the same levels. And you do see here that now you've got open interest basically spiking at all these nice key levels here. Either way, I think the 32.35 is still where you should be looking. Now, you guys that have seen me before know that oftentimes what I'll do is I'll say, okay, so the market's pricing in $3. Let's do just $1.50 and see what that looks like. Especially in a shortened period of time, I'll do that. I do that often. And I'm going to price it out actually just so we can see. Give you an example of what happens. So the $32 call in this case, going long that is going to cost $205, not $20.83, $205. Simultaneously going short the $35 call, you're going to get back 93 of those cents. So $112 is going to be your net outlay on this one. Okay? Sound familiar? Going out to August, it was $116. So keeping in here, it's $112 because all of this volatility is centered around the earnings. And there's a ton of implied volatility here because of the earnings report that is due. And that's where you get the sort of uncertainty and people are not really sure what's going to happen here. Okay? So there's only a 4 cents difference. Really what the difference is in coming this short is that you just want that money to get there quicker, right? You don't want to stick around. You don't want to wait around that long. Anyway, so $112 would be the net outlay here. Again, the difference in strike prices is $3, so you can make $188 on $112 or 167%. But if you tighten it up a little bit, $32 call is going to be $205. Simultaneously shorting the $33.50, you're going to get back $141. So your net outlay here is only going to be 64 cents. Now the difference in the strike prices is $1.50 minus that 64 is 86 cents. Divided by the 64, you can make 134%. So my suggestion is if you really want to do a tighter time frame, don't go all the way out to the 35. Just do the 32, 33.50 trade. Okay, so this is what I'm going to say here. Shorter term bullish idea is long the July 21st 32, 33.50 call spread for a 64-cent net debit. Now that may be a lot more palatable to you guys that don't want to keep a bunch of capital tied up in a longer term trade, okay? But I will tell you that the risk here is going to be a little bit greater should the stock not move exactly in the direction where we want it to initially, okay? So there's that. Oh, Kurt, I didn't even know you guys could see the live numbers. That's a new thing. I thought that they hid those from everybody. So anyway, okay. Now let's look at the shorter term bears. It's going to be the same sort of idea where you're going to do the 32, and then instead of going all the way to the 29, just do the halvesy rule and just get in on the 30.50. So in this case, you can go long the $32 put, and again, this is just July 21st. You get $1.99 is what it's going to cost you. Simultaneously shorting the 30.50, you're going to get back $1.34. So that's 65 cents going to be your net outlay. Virtually the same thing that we were seeing on the other side. So this is shorter term bearish idea is long the July 21st 32 30.50 put spread for a 65-cent net debit. A net debit is what I just typed in, but you guys know what I mean, okay? So there's that, all right? So bulls, bears, whatever. Obviously, I mean, have I made it obvious? I don't know if I made it obvious. I think I showed my hand before when I told everybody that I have this in. This is my devilishly bullish smiley face on the price consensus surprise on Micron. I have it in home run. I have it in momentum. I have to be bullish on the stock. So I think the trade that pays, in my opinion, is going out to that August, is the long-term August trade. Long-term August bull. Okay? I think that's the trade that pays. I believe some of these other ones are gonna pay too. Okay. Now, for being very, very aggressive, guys, you could bet that. So every once in a while I put together these lottos. So this is very short-term trades on that you would basically buy a scratch-off ticket with, but instead you want to do it in the options market. I think it's a 35 call because if it spikes, it's going to spike to the upside. We've seen in some cases this thing does have a tendency to move 18% or 20%. And yeah, I know it's funny. Long term, but longer term in terms of these options trades, because these are shorter term ideas. Ultimate long term is just, going long. Was it, Bill? If this was my stock, was it my stock of the year for 2017? I'll take credit for it if it was. I do have a video in December of me saying that NVIDIA was going to be $250 this year. So it's 40% off of that, but I was pretty bullish on NVIDIA also. So I think Micron was on my list too. So there you have it, folks. So officially, I'm going to say Lotto, long 35, call for 45 cents. Okay? Boom. So that's all I got, folks. So again, if you're not already hooked up with us, shoot me those emails, livetrader@zacks.com, because you're going to miss out on all the fun stuff, including the morning after this Friday. I think that, that is the best one ever anyway. The morning after and the chat room are even better than any of these videos that I do, I think. Maybe that's just me. Maybe that's just me, right? Yeah, a few of you guys have made some money on the lotto. Yes, lotto is June 30th. Live dangerously. Anyway, and then Friday morning we're going to be covering all of this. So shoot me those emails, livetrader@zacks.com, if you're not already hooked up. We'll get you on the distribution list too. Catch us in the chat rooms. And I believe, folks, that's all I have for you today. So thank you so much, everybody, all 83 peak concurrent viewers on this one. Thank you for coming out and spending the time out of your day. I know a lot of the times people watch these after, so thank you for taking the time to come out here today. Thanks for your questions. I will see you all in the chat room later on, I think. And if not, tomorrow we've got Nike, followed by the morning after on Friday. So thank you guys so much for hanging out with me here on Zach's Live Trader, and I will see you all mañana. Have a great day.